All right. I think that should. Let me make sure we're live. Oh, man. All right. I think that should. We are live. All right. Tony, long time no podcast.
It's been how many months? Since probably April, May.
Oh, it's been a long time, man. How have you been? Tell the people what's been up. Where have you been on Twitter?
Where have I been? Well, I think, when did I get off Twitter?
A couple months ago, I think.
Yeah, it's probably been like 3 months now. I don't know. Twitter just kind of, everyone knows how Twitter is and can get. It's just kind of, I don't know. We talk about this a lot. I just kind of feel out of place on Twitter. Like, I don't know. I really did enjoy posting all the educational material and the threads a lot, the little, diagrams and stuff we would make. And I miss that. I really do want to get back on Twitter. I've actually thought about maybe making just a private Twitter where, I don't really follow anybody. I just post material and it'll always be there, and it's obviously free and for everybody. Kind of like a Discord, like an archive where you can always kind of go to my Twitter and find that. So I've thought about that, but I don't know. I just always felt like out of place on Twitter. It's just, I don't know. I feel like it's just gotten, when I got off a couple of months ago, it was just getting really bad. Just everyone knows how it is. People going back and forth and arguing,
Fucking
and
cesspool, man.
yeah, and I'm kind of pretty the opposite of that. I'm kind of quiet and I don't really, get into it with anybody. I just kind of like to do my own thing. So I don't know, but
It's
yeah,
I can honestly say since midterms are coming up, like we're in like bingo bongo terrible territory on Twitter and Elon takeover. Oh my gosh, dude. Like I mean, the amount of like just terrible things I've seen on Twitter the past probably week has been painful. Has been painful. Like and also just the amount of like trash that people are putting out there about like the midterms and stuff, like just fuck
yep.
off. Just literally just fuck off. Like I don't want to see any of that. I don't want to have to hear all these stuff. So I muted MAGA, Biden, Trump, Elon, um, midterms, Republicans, Democrat. I think I muted like almost everything that is like political because
Political.
I was so fed up with it, man. But
Yeah, I that's another thing. I'm not very political, and I'm not ignorant enough to think
Trump,
I know politics too well. So
yeah.
that's another thing. I don't need to see that arguing and back and forth over.
The other thing too, man, is like Twitter's a great place to learn a lot of good stuff. Like there's a lot of education that goes out on Twitter. Me and you put a lot of education out on Twitter. Um, but like it's not a thing that you have to have. Like if you're fine without it, then go without it. If you can trade without it, then go without it, man. There's no one telling you you have to have Twitter in order to be able to trade and shit.
Yeah, I don't know. When did you were on Twitter before I was, probably what, 3 years ago? Uh,
Like 2020, I think.
2020, yeah. So I don't
You
know. Back
when we
back then
first
it
met, you weren't
was,
on Twitter. I remember that.
yeah, when we first met I didn't have a Twitter. But I think even back then, like, I don't know, you got to also think how the market was 2, 3 years ago.
Oh,
It was kind of just like you could throw money into anything and make money, and it just was like this euphoric market where, and you saw the same thing on Twitter. Everybody essentially was making money. or people were acting like they were, and then um, it kind of, everybody was like getting along. There really wasn't back and forth and everything that there is now. And then I don't remember when it was. I think it was, I don't know if it was the fall of 2021 or maybe it was the fall of 2020 when I remember it was like a specific time. It was around when Trump got COVID.
Yep,
Um,
I remember that.
and it just like this weird and then all like I'm not sitting here like to bash Trump, but I really am indifferent on politics or Trump or Biden or anybody in general, but I just remembered it was like the whole thing with the cat. It's just a bunch of like political stuff, and then the market got really bad, and it was kind of this just negative environment, and it's just kind of spiraled from there. And I don't know, that's just kind of why I needed a break from Twitter in particular. And I had some, like I had some external stuff going on, like
Yeah.
in real life. So I just needed a break.
Yeah, man. We all needed a break. I got married, went on a honeymoon.
Yeah, you've had a lot going on.
Oh yeah, I had the good and the bad and the ugly all in about a 3 month span. I don't think anybody really knows much about it other than the whole marriage part, but we definitely had some shit go down both of us. And also, it just became like even before we both had like crappy life stuff hit us. Like we were getting tired of constantly editing, like it felt like it was turning into a chore more than a like a fun podcast. And so that's why we're back with this form rather than like the fucking whole edited up and intro and crazy stuff. Um, you know, got tired of doing that, editing constantly, all that kind of jazz. But yeah, we're back for now. We'll see how long we go for. We'll see how long the season lasts. We'll see how long until season 4. But we're back and we're ready to give out some good, long-term type stuff and hopefully make you guys some money. What did you think of FOMC today, man? Like, what did you kind of get out of that move? The 3-pronged move we had. We had like it knifed right as FOMC came out, and then it shot back up, and then it knifed big time to end the day.
Yeah, so we normally get like an ABC move, sometimes an ABCD move, where normally it's a pop, like an initial pop, and then like a pretty substantial flush, and then it would always seem to bounce back and kind of run to close, make a new high on the day. And that was our normal FOMC routine. I believe it was all the way back to May, and you asked me this morning, we had talked about it. On average, how much was SPY moving during FOMC days? And I believe I looked at the last 4 because there wasn't one in September. The last 4 SPY moved in both direct, like a daily candle was, 4 or 5 points, maybe 6 points. Today we got an extremely substantial move. We basically had a 15-point move from the top to the bottom, and that started at 2:30. So basically an hour and a half. We were almost vertical.
Dude, there's got to be some 1,000%ers out there.
Yeah, I know there was some people in my Discord that were I see Tim's in chat. Tim I think Tim got like 300%. There was some people that played some lottos and got some good chunks out of them. The issue with this one is if you go look, so I'm pulling up the 10-minute. If you pull up the 10-minute, there was a period in there where it looked as if we were getting that move after the pop or the move after the flush. So if you look from 2:30 until 2:50, that's that flush we talk about after the pop.
So like here where it reverses?
Yeah, and then if you go to the 3 o'clock 10-minute candle, that one, you're on that green candle.
Yeah.
That looked like, okay, now this is the pivot where we run the rest of the day. After that, the big flush out, that's the normal pattern we see. That right there, I know, just from like being in the Discord today, I think that got a few people where they may have held some calls a little bit too long, because you can see then it was actually a 10-minute triple cross. I had posted that there's a 10-minute a cross setting up. And you can see then at that 310 candle, I mean, that's a big time knife. That's, 3 points. So
Yeah.
I think that got a few people today. But if you had money, you had, chances to make money both ways and make a pretty good chunk. So,
dude, here's the thing about SPY today and the past 2 days is you go and look at this 5-minute chart over the past 2 days, like that action is borderline untradeable. Like from here on, so yesterday at 11, which that's 11 my time, so more like noon Eastern time, until FOMC, like I made, I think, one trade between this like 11 yesterday and FOMC today. A single trade, because if you just look at it, I mean, look how tight that shit is. Like there's not much movement happening, and when there is movement, it's usually not following technicals all that great. The one thing I have noticed that can be useful have been the wicks. Like the wicks here really told the story. The wicks here told the story. And then today at FOMC, wicks were really, really nice. Like wicks at the top here before this kind of fall down, and then wicks on the bottom here before the push up. And then you see top wicks. And then you see bottom wicks here before this little, run up. So wicks have been really, really nice when it comes to FOMC. At least today they were. I don't know about in the past. I don't play FOMC though, hardly ever. I'll play it, maybe a straddle here or there, or occasionally if I'm feeling a certain way, I'll take like a lotto call. Like today I had like a few lotto calls, and then I ended up selling. I don't know if you know my trading strategy, but my trading strategy, well, I know Tony does, but I don't know if the people watching know my trading strategy. I hardly ever hold more than like one contract over like 10%. Like I'll have like 40 contracts sometimes if I'm in something that's a little bit cheaper, and I'll sell for fucking 5%. So I literally sold, I think, like right here at 384. Like this thing like knifed down hard, but I held because I don't know, there was a small position, and then it got all the way back up to this 384, and I ended up selling, and then I watched the candle like shoot all the way up here. But I didn't really feel any certain way, because then, if I would have held all the way up for this candle, I probably would have held into this dip and then would have lost all my money. So I'm not really too upset.
The issue with that, and like when you see people posting like big time gains, is there's a couple different factors. One, obviously, like looking at it in hindsight, a
2020 baby.
16 point, a 15, 16 point move, of course you would have held your puts and rode it all the way down, but there's no way of knowing that that's going to play out like that. And also, if you're going to play something like this and hold it for a substantial amount, it doesn't make a whole lot of sense to do that in your main account, because like you said, sometimes you'll trade like a substantial amount of contracts.
Mm-hmm.
And specifically with options, like if it doesn't go your way and you're playing something like FOMC where it's unpredictable, like that's a pretty decent size hit, and it just doesn't make sense. Like I always tell people that if you're taking lottos, or you're playing something like FOMC, you should almost have like, I call it a play account. You should almost have a separate account for that kind of stuff, because
Robinhood's great for it.
Yeah, and you don't want to, like, if you're trying to progress a main account and make progressions on it, and you do something stupid on a day like this and wipe out like months worth of work, you're gonna feel like an idiot. Yeah. So
dude, for some reason Zoom I don't have Pro right now. I used to have Pro, but we're gonna have to end, and I'll send you a link quick.
Okay.
Sorry to everyone who's watching. I had no idea that Zoom was doing this nowadays, but we'll be right back. You can just stay on here, everybody. Just got to send this link to Tony. I don't know why it did that. Usually it never used to do this for us. when it was just us two at least. Um, but good news is I'm about to unleash my new swing. Most of you in here probably already know. I know there's a lot of you guys that are in here have been you know in the swing already, or at least known about it. Can you hear me, Tony? Everything working?
Yep.
Sweet. I was just telling people I was about to talk about my new swing after we finished up going over FOMC and small account, but you can continue with the
Oh
small
no.
account separate account.
The only thing I want to say is there was some questions in chat that I'm seeing.
Oh hell yeah!
Um,
Let's go through those quick.
Adnan, sorry if I'm pronouncing that wrong. I hope not. He said how to overcome the fear of losing. Psychologically, given the tape the past year, find myself hesitating on trades that were more routine in the past. I guess that's kind of a question about overcoming the fear of losing. So I don't know if you want to touch on that first or.
Yeah. Size down would be my first thing. Is cut a little bit of that exposure out. Because if you're scared of taking the losses, it probably has to do with one of two things. Either you're playing with a bit too much cash, or you are possibly just feeling a bit of like a trading insecurity. But I would say most likely start with sizing down a bit. That'll be first thing, and then second thing is sell right when you're green for a while. Like I think a big thing for me when I started was fear of loss was kind of fueled by seeing something green and then seeing it go red and then losing money and then just kind of having that insecure feelings over and over and over about like, I don't know if I should buy into this. I don't know, is it gonna go red on me again? I don't know, do I sell? Like just kind of those questions that are in your head all the time. I would say the biggest thing to do for those self doubts in your head are just stick to the selling quickly, guys. Like biggest thing is sell that shit when it's green, and don't let it go red on yourself. If you're green, like if you're up 2%, I can see not having a stop loss set. You're up 2%, you're gonna let it ride a little bit, but once you get up like 4 or 5%, put a stop loss at even, guys. There's no reason not to put a stop loss at even. Stick a stop loss at even, and keep yourself guaranteed a green trade. It'll be very, very beneficial for your mindset. What do you think, Tony?
I think the biggest thing, and like I know what you said is like I agree with everything you said. I really think the biggest thing is just finding something that works and not trying to trade, a million different tickers, or not trying to trade 5, 6 different strategies. I really think like if you have like 1, 2, 3 different things that you look for and that are kind of like A+ setups for you, or they're really low risk with reward potential. I think, honest to God, I really think that's the biggest thing, because it's all about consistency, and that's if you can find something that's consistent, like for me, if you've been in my Discord for the last 2-3 months, I won't shut up about these triple crosses. I know it's probably annoying by now, but it was just something that I found that was really consistent. And I like to play those because they're still low risk. I like to play retests of something like a 9 EMA, or I like to play supply and demand. Everybody knows that. And another thing is too, if you find yourself, so say something's in a downtrend, and you find yourself kind of buying puts into that exhaustion, or you're just buying puts because you see something's in a downtrend, but you just you're chasing the move and you don't want to miss if there's potential, more potential downside, or vice versa. If you're chasing calls into something that's just been continuously running, I see that as a problem that a lot of people have where they're buying calls into green candles, they're buying puts into red candles. You want to be doing the opposite. If something, you want to be trying to get a discount on your contracts, or you want to be trying to buy a pullback in either direction. If maybe you get a little retest of the 9, that's a great area to go short in a downtrend and a great area to go long in an uptrend. That means that, if you're going long, you're buying into a red candle and vice versa. If you're going short, you're buying into a green candle. I see a lot of people struggle with that where they're chasing entries. And I just think that inconsistency in something is the biggest thing. And if you found something, if you review your trades and you're like, well, damn it, like I was green on 8 out of these 10 trades, but I didn't take profit because it was only, like Teddy said, like 5-10%, and you were kind of getting greedy. It's never going to work. So
I agree.
I know
110%.
I know I kind of rambled on, but I think that those couple things are extremely important.
I think you nailed it on the head there. I think also one thing to kind of keep in the back of your mind is if you want to go short on something, why are you buying a red candle? Why not just buy a green candle? Wait for one. If you want to go long on something, why are you buying a green candle? Wait and find a red candle to buy. Like just keep that in the back of your head that if you're buying a red candle on a downtrend, then you're probably chasing. If you're buying a green candle on a downtrend, you might probably getting a dip, and vice versa. I just got the funniest text that I have to share on here. I'm not sure if anyone can see this, but my dad sent me a picture of a deer heart, and he's eating a deer heart right now. I don't know why the fuck. He just said heart is unbelievably good, and it's just him eating a deer heart.
Is it from a deer he shot?
Yeah, he shot it and he cooked it, but I never expected to get a text that said deer heart is unbelievably good.
There's another question, Ted. It says, oh, there's two. One, do we chop around 375 to 380 up until CPI next week? What are your thoughts on that for SPY?
Let's go to the daily and the hourly. We'll talk about both of them quick. So for the daily here, we very clearly have a zone down here that will probably end up touching at some point, in my opinion. I'm not going to include this green candle because I don't feel like it. It's kind of an anomaly. So this is what we have on the daily as of right now. It is sitting at 374.70. That daily close is extremely strong. If anyone knows a lot about candle closes, you know that closing without a wick indicates very, very massive strength. And so to see that to the downside is more than concerning for SPY short term. I also think this is another zone we probably could be in for here, just based on these two bounces here. But we kind of zoomed through it here on the 24th, so I could see that probably not being as much of a factor. If I had to give you guys my bet, I think we're probably in for a few days of red until we get down to this 360-ish area. But then again, man, like the market can change on the flip of a coin. So I would say on the daily, it looks like we have a little bit of downside coming. On the hourly, let's just remove these drawings. The hourly here looks just super toppy on the hourly. Honestly, the hourly looks like it has some downside. A big thing will be how we open tomorrow. If we gap up tomorrow, there's a chance that we can hold this support. Like if we were to gap up pretty heavy and then run at open above 380, then we could probably keep some things, save our pants. But if we open sideways or if we open with a gap down, then I would say again we're definitely in for some red to start. Probably next week. I would think into next week before CPI comes out. I think we'll probably see at the minimum like a 365, 367 area before we were to see a bounce. Just based on today's reaction alone, paired with the daily and the hourly, I'm thinking bearish. What are you thinking?
So just checking like through the daily and the weekly. I currently have a zone on the daily from 373 to 376. So, and it's currently in that zone. I would expect at least a little bit of a relief bounce if we don't just completely gap down through it tomorrow. If we gap down through it tomorrow, I would actually look for that zone to be resistance. I would look to see if that zone actually turned into supply. And if that does happen, if we do get a gap down tomorrow and that zone flips into supply, I think we could easily see 370 or lower.
I
The
agree.
other concerning thing on the daily is we do have a triple cross that is set up on the daily. Again, if that pushes through the zone and gaps down tomorrow, that will probably be that cross playing out. But Brennan, to answer your question, I think we probably, it's going to be pretty dependent on what happens tomorrow. Like I said, if we respect that zone or if we gap down right through it. We did have quite a bit of volume today, so I am interested to see what happens tomorrow. But I do think, or at least those are the couple scenarios I see playing out.
Yeah.
There's another one, Ted. What timeframes do you use the most for finding option trades?
Ooh, it's a good one. So I think the first 2 hours of the day, the 5 minute is the best. And then after 2 hours, I switch over to the 10 minute just because I think you need more data when you have lower volume. So, or actually vice versa. I think you need more candles when you have higher volume. Less candles when you have less volume makes sense to me in my trading strategy. So I stick with 5 minute when it's very high volume time. So even when CPI happened today, I switched back to the 5 minute. And I'll do the opposite when the volume starts to die off. I'll switch to the 10 minute and look for 10 minute setups. I just think that's kind of an easy fail-safe way to kind of protect yourself when the volume gets a little bit lower. You need setups that have taken longer to develop because you're going to need a bit more of a move because there's less volume to move that set up in the direction that it needs to go. So you need to have something that's taken longer to develop that will be more sustained. So less volume equals 10 minute, more volume equals the 5 minute when I go to option trading. When it comes to like swing trading, I'm more of a daily, hourly kind of guy. So that's kind of my rundown of time frames.
Yeah, the timeframes that I use, I like to look at a little bit of longer time frames. So like if I'm like prepping the night before, I like to look at the daily, the weekly, hourly, 30-minute. I like to look for zones, where my EMA's at and my moving averages at on my higher time frames because there's a chance that those get respected. So I like to plot those levels, and I always like to take my entries on something like the 5 or 10 minute. So say I identify a zone on the 30-minute and I see something get near that zone, I'll then kind of drop to a lower time frame if I'm looking for an entry. So and it's also a lot easier to identify zones the higher you go up. So that's kind of how I like to look for things. I also, during the day, will just kind of switch through the 5, 10, 30 hourly and see, are there any crosses setting up and stuff like that. So that's kind of how I go about it.
Yeah, I like that. I like that. One thing I will say about time frames too, that's kind of counter what the general public,
Intuitive.
counterintuitive is. People like to trade the 1 minute when it comes to small moves. I kind of think it doesn't work the right way. I kind of think like the way that I've seen it and the way I've played it, the 1 minute, those setups hardly ever play out the way they're supposed to be because there's always a setup on a higher time frame that kind of like overweighs, if you know what I mean. The one
Dwarfs it.
minute setup. Yeah, like I see like a 1 minute flag will be popping up, but then on the like the 5 minute it'll close like an inverse hammer. And so I've always kind of just, a lot of people like the 1 minute. They say, oh, for small moves, the 1 minute, which that should line up with my trading style because usually when I'm in something, I hold it for, 15 minutes or less. It should line up with my trading strategy. I've just never been able to find, 1 minute setups that end up with the moves that I need. It always seems like there's like, if there's a 1 minute flag, then the 3 minute has something that isn't quite, working. And then the 3 minute setup ends up working more so than that 1 minute setup. And or, like there's a 1 minute setup, the 5 minute candle doesn't look right. And then I just can't seem to follow why I would trade that 1 minute pattern when the 5 minute doesn't align with, bullish, when the 1 minute might be very bullish, but the 5 minute is bearish. And the 5 minute seems to win out about 70% of the time in my experience, I guess. So that's why I stick with the 5 and the 10, is it feels like they have enough weight to actually pull things around.
The issue too is like then you start getting into like information overload. Like sometimes I even find that maybe I'm switching through too many time frames. I think it's extremely beneficial like during pre-market or like the night before using a higher time frame, plotting out key levels, plotting out area like where your EMAs are, and any zones and stuff like that, if that's the kind of stuff you use, and then sticking with a 5-10 minute lower time frame, because if you're like switching between the 1, 3, 5, 10, you're going to be seeing everything in every possible scenario, and you're just going to end up not taking any trades because you see both cases for why it could work and why it couldn't. So
Yeah, I agree. I'm going to talk about
Bethany's on MTCH tomorrow. What is that?
Oh, let's fucking look at this.
MTCH.
What is that daily candle? What am I looking at here? How did it open? Oh, it had earnings.
MTCH.
Okay, so they missed on EPS, beat on revenue, and they opened up, what is that, 10%? They opened up 10% and then closed down. Oh, so back towards even. They opened up 10% and then closed all the way back down. Damn, that entire gap.
Things been in a downtrend for a year.
Things
Holy shit. Anthony, what is that?
How did it? Why is that opening 5-minute candle so disgusting? Look at that thing. Wild. Look at that thing. That is like a fucking 8% candle at open. That's nuts. That is crazy. Dude, we're gonna have to talk about a few long-term things. But I am first gonna talk about. No, not this one. There's a stock that I think I'm gonna swing trade for the holiday season, and I just went and did some blue collar DD today. This thing, although the chart right now looks really, really gross, so call it what you want to call it. This chart looks disgusting. It just broke support, but I think we're in for some really good moves for a few reasons. First off, wintertime and early 2023, they're about to open up 2 new stores. I went to this place today, actually, because I wanted to look at it, because I took some earnings lottos, which they actually beat earnings. You can look at this. They beat earnings. There's some fishy stuff going on with this earnings report, though, and I'll explain that a little bit later. But you can see they beat earnings, and obviously they're down, 10%? They're down 20% from the top here, but since earnings, they're down about 10%. But the reason that I went and looked at them today is because they have a PE ratio that is something worth seeing. Let me go to my FinViz here. You guys can check this out too. So TCS, which is the Container Store, if you search that up here on FinViz, their PE ratio right now is 3. Their price to sales is 0.21. They have a book per share of 8.72, and they're sitting at 449. Their sales is 1.1 billion, income 74 million, market cap 230 million. So, they've got some good stuff going on for them. They have decent margins, they're not doing bad. They just made 31 cents per share, which is not terrible. It's definitely not bad. Their ratios down here, not really that bad. So they're doing okay financially. The biggest thing that I noticed this week was, they came out on yesterday morning with JP Morgan downgrades for TCS. And then paired with that, they were down 5, 8, 10% on that, the JP Morgan downgrades. Their earnings reports came out, and I honestly thought I was getting fucking bamboozled. They beat earnings, but every single top line was comparing them to years in the past and how they didn't beat the EPS from last year. One of the lines in their earnings reports was literally like, we did not make as much money this quarter as we did last quarter when they beat their own expectations. So if you're a CFO and you're looking at that, what is that like? I mean, just what does that tell you? That tells you that they literally did not try to make this earnings look good, because I thought they looked good. Their numbers, I thought they were just fine. Like, obviously, you did not beat last year's earnings because right now we're in a supply shortage. Like, there's just a lot of crazy stuff. Inflation is going fucking nuts. No one's expecting you to beat last year's numbers when you're not like an Apple, Tesla, blah, 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 blah. Like, you're fine if you're just, beating your own expectations. They beat their own expectations and they didn't mention it. That makes no sense to me. And I was thinking, either the CFO is blind. I looked him up on LinkedIn, found his name, looked at his past. Either this guy is blind or they're wanting the stock price to go down. And the only reason I can think that JP Morgan, a few other, big money, big suit man companies want this to go down is so that they can either, one, add shares or get out of their shorts. And what are both of those good for? A stock price. And it's holiday season. I just can't get over how it's holiday season coming up too. The biggest consumer time of year. I'm having strong feelings for TCS. And then I went there today and it was like mini fucking IKEA. I'm about to post my blue collar walkthrough of TCS. But there was literally, I walked in and someone said, "Hello, how's your day going today?" As I walked through the door. And then they had little like closets set up. They had like fucking, wine holders. They had everything, dude. They had literally any container you could want. They had wrapping paper, which I'd never thought of before. But Tony, wrapping paper is kind of a container, if you think about it.
Wrapping paper?
I mean, just give it a thought, dude. Wrapping paper is kind of a container.
Yeah, I guess, but
technically,
that's a stretch.
Technically, no, but like this stock here, I like the PE ratio. I like the season we're going into. I looked back, and October, November, and December have been historically strong months for TCS. And I think the risk is just very defined here. There was one other thing I wanted to look at. TCS institutional ownership. While I'm on here, I looked at it earlier today, and there were a couple ads today, actually. Yeah, so we had a company decrease its position today, but they had 64,000 shares. We had someone add shares. And then I have no idea what this even is. They changed 0% of their shares, so I'm not sure why that's up there. But so we had a net add of shares on this. And so I'm feeling comfortable about taking some at 450, maybe even 420 down here, because Post is already down even further. I don't know. My average going into earnings was like 490, something crazy. I ended up selling it for -2% before FOMC today, and I'm still feeling good about adding this and holding it through the holiday season with a PE of 3, with them trading. They're going to be coming down, and they're trading below book already. But I just don't see how this thing, continues to defy the financial numbers that they're putting out, and opening new stores. We've seen growth. We're also just probably seeing some downflow from this trend break here. But I'm comfortable holding this for November and December. I feel like it seems like it could be a really good time of year for them. It feels like they could come out with, a couple PRs of store openings. I don't know. I don't really like to trade charts usually like this, but for some reason the financials and the fundamentals are lining up on this one, and I'm feeling pretty good about it. So I'm going to add some, probably tomorrow or, into the next few days. It'll probably be like a 4-legged attack. I'll probably take a starter and then add, 2 more legs here and there, and then save one for when it's, really, really down. But I'm liking this medium term here. Tony, you got any long term stocks that you're really, really into? Stuff you want to plug onto the show for people?
Um, Not specifically like outside of stuff I've already touched on. I had added some what was this? I had added some Ford on the 20th of October. It was right
Where's Ford
near a
at?
demand zone. Um, I really like Ford.
I love
I
Ford.
really like AMD. Um, I like Amazon a ton. Um, and we just failed an extremely, extremely key level. If you pull up Amazon, Ted, um, it was at a pretty strong demand zone all the way back from May that it's interacted with 20 times probably,
Oh, jeez.
which was also in line with $100, which is a key psych level. The reason I have not added Amazon yet is now it's basically anyone's guess where we end up, but I think something like Amazon, I feel like it's one of those that you can't really go wrong with. It's all about though taking the right approach to something like that. You're not just gonna see that Amazon's now at $90 and just buy a full position because we could continue and end up at $60 in a month or two.
Mm-hmm.
Um,
Be careful with it, guys. That's the same thing as like with our Ford plays and stuff like that. Be careful with them.
yeah, it's all about you have to have this mentality. It's all about like allocating cash in bunches. So if you're going to add something like this 4 times, okay, add 25% at $90. If it works its way all the way down to $50, you're scaling in, at key areas and you're getting a extremely good average. And that's also cash that's allocated for long term. So it's not like your rent money, stuff like that.
For
And the good
sure.
thing, so if you look at the F chart, the good thing that, sometimes that happens when you're adding long-term stuff is I didn't take a full position on Ford. And, it kind of ran before I was able to take, a pretty sizable position and you have the opportunity to then sell it. So there's going to be times where you kind of nail an entry on something and you don't get a full position and it just kind of goes without you, which is great. And then there's, the flip side where you just actively scale into something and get an extremely good average. So
Yeah.
um, those are the kind of the ways you have to approach stuff like that. But I love Amazon. It just broke a very significant level though. So
Dude, look at Ford on that 200. It
yeah,
has not wanted to go below that 200 at
yep.
all. Dude, I'm into Meta. I made a video about it like last week, but I'm super into Meta long term. I think, dude, honestly, I really think I'm into stocks that are getting like dirt cheap. Like these charts are terrible, but like they're just so dirt cheap that I feel like the risk reward on a lot of these, like Amazon soon, it's gonna be just like Amazon soon. Like is Amazon probably gonna drop a little bit further than where it's at right now. At that point, it's gonna be dirt fucking cheap. And when it gets to dirt cheap, like sometimes the technicals just start to fade away, and it's just like, oh, I physically have to add this unless I think the company is going to fail. Like if you think Amazon is going to fail,
Yeah,
obviously you don't
it's
want to be adding at like $50, $70, $90. But like if
you
you
don't.
think, go ahead.
Oh, I was just gonna say you don't want to be pouring your money into like, you know, risky stuff or
Yeah, like fucking
stuff
like
that's not proven that you
AMC.
just yeah, or stuff that you just like and you think is gonna be like the next big thing.
Mm-hmm.
Because like if you look at something like I mean, how many of these have there been? Wish, SoFi, CEI, the list goes on and on. Like I loved SoFi, okay, but if you look at SoFi's at like $4.
Mm-hmm.
It's, it topped out around like $30. So
Yeah.
it's, there's just stuff that, is always going to stick around, like your Apples, your
Amazons,
Amazon,
Fords.
Ford, Meta, AMD, stuff like that. So,
Dude, here's the thing too that I think is like a really solid way for people to just like not have to think too much and be able to tell like, oh, is this company possibly worth an investment, or is this company a trash shit company? And that is, are they positive? What I mean by that is like, are they actually making money? Is their EPS, all you have to do is go to their last earnings reports, like their last few of them, is their EPS above zero? If it is negative, then that company is likely fucking garbage. Absolute dog garbage, dog water, water that a hot dog was cooked in. Like literally that is exactly what that company is until they break that even. Until they break even and start making money, there's no reason for you to be invested in that unless it's like some biotech that like, you have some crazy DD thesis on and you feel invested in. Different story, but then you should only have one or two of those. If these companies are not making money, then there is no reason for you to be invested in them. Like these small companies that people are like talking about as investments, which I get. I just talked about TCS, but I'm not talking investment wise. I'm talking like swing trade through the holidays. If you're, thinking about investing in something that's like I don't even know a name to think about right now, like a less than $50 stock, like DGLY or DBGI, one of those companies that I've seen like posted all over Twitter all the time. Those are bad companies. They're not making money. If they're not making money, then why should you be invested in them? They're not making money. They're not making money for themselves. They're not making money to keep growing their business. They're waiting to break even. There's a chance, probably like a 90% chance that they never break even. And they just continue to just burn money until just the end of time. And their chart is going to, let's actually go to this. This will be a good one for people. People might remember this one. Their chart is going to end up looking like this. Their chart is going to end up looking like AHT's, where it's fucking, right now it's down at $6. But back in the day, this thing was $1,000, $1,000. Oh no, this thing never got over $20. It was just reverse split right here. After reverse split right here. Reverse split, because they never made enough money. That's just how it works. If they're not making money, don't invest in them. That's a good rule of thumb to start with. And then the second thing that I think Tony already kind of touched on is invest in stuff that is, very, very unlikely to fail. It's never to say, you can't never confidently say, oh, I know that, let's go to Meta, for example. Just look at the chart while I'm talking about this. You can never say, oh, I know Meta is not going to fail. Like I know for certain it's not going to fail. There's a chance that Zuckerberg burns the actual, shit out of their money and just ruins this company, runs them into the ground. That's for you to decide. I personally have decided that I think if TikTok gets banned, I think this company goes to 150, within weeks, months. And then if they were to ever, become successful with the metaverse, which I think they will, from what I've seen, this could be a $500 stock in the future, $600 in the future. But that's for you guys to decide. They're making money. Let's see what their last earnings was. They make $1.64 per share. That's decent money. They're a big ass company. I don't think they're gonna fail. But there's also fringe companies. We can talk about fringe companies a little bit more too. Those are like the let's find one of those. Not like a SoFi. What's a fringe company? PLTR. Let's go to Palantir. This is like a fringe company here. Look at that. Reported -1 cent. So, like, very close. These are fringe companies. They reported positive this earnings. They reported positive this earnings. They reported positive, but they just reported negative last earnings. Fringe companies, those are close. Some people think they're worth an investment. I don't think they're worth an investment to start off with. I'll just keep it real with you guys. I think fringe companies should never find their way into your investment portfolio. It's what Kathy Wood did. And look at her ETF right now. I think for the most part, these fringe companies should probably be in your swing account. Swinging them for these moves that can happen week to week, month to month. That's exactly like TCS. TCS is a fringe company. They're net positive, but they have some issues with their company. So I'm swinging it, but I'm not going to invest in it. The things that should be in your investment portfolio are the bulls, like the strong-headed companies that you're very, very confident in, and like you use their products a lot. Like one I've been thinking about lately is Starbucks. I've been really thinking about investing in Starbucks. I don't know how
I
you
love
feel about
Starbucks.
Starbucks, Tony, but
I love Starbucks.
people suck that shit down like it is going out of style, dude. People go crazy for that $6
I'm a big
morning latte.
Starbucks believer.
I like.
I only like black coffee though, so I guess I just like their black coffee over Dunkin' Donuts. So
You know what I've been drinking lately? Black espresso with like a not a normal sugar cube, but like a brown sugar cube, like a raw sugar cube, and then just half and half. That's all I is just
see, I
like
can't do any sugar or anything.
damn, bro.
Has to be black.
That's pretty tough.
It has to be cold.
That's like Black Air Force energy right there. Fucking like straight up just like raw dog and black coffee.
Dude, I can't.
Damn. Oh man. Got any other names that you like? Anyone in the chat got any names they want us to quickly run over quickly?
Anthony said Elms.
Oh my gosh, dude. That's a company that me and him talked about a while ago. They were like an electric vehicle. Now they're in the OTC, bro. Look at this. Look at this drop. They were a SPAC back in the day. So like they were a $10. I traded them so hard on this $10 move all the way to 15. I literally went like balls to the wall on them when they were like 1070 here or 1080. Rode them all the way up, and then now they are 6. That's not even 6 cents. What is that? Is that? I don't even know how to read this. Is that a? Oh my gosh. Do you know how to read this, Tony? Is this like a little over half a cent per share? Is that what that is?
Where's your cursor?
Look at this. That's less than 1 cent, right?
That would be half of a cent.
Oh my gosh, per share. And they got a SPAC deal at $10 per share.
Yeah.
Less than 2 years ago. Right around 2 years ago. Never mind. Right around 2. No, less than 2 years ago. Less than 2 years ago, these guys completed a SPAC deal at fucking $10 a share. That's
I think
nuts.
we have 3 minutes left, Ted.
Okay. All right. Should we wrap this bad boy up?
Austin's in here.
Oh, the Austin.
Yeah, the only thing I want to say quick is we appreciate you guys tuning in. We're going to, each episode we're gonna, try to have some talking points or just kind of keep it casual. But each episode we want to at least provide some kind of information. And everyone's always welcome to ask questions like they did tonight, and we'll always answer those. So I just appreciate anybody that hopped on with us.
Yeah, I appreciate the hell out of everybody on here. In the future, I'm gonna upgrade to the pro so that we can not have to deal with having to exit out and stuff all the time. But we appreciate you guys for hopping on here. It was the first episode, getting back into the rhythm of things. I'm sure that there'll be a lot more to come. We talked, FOMC today. Next week there'll be something to talk about, and there'll be a lot of questions in the chat from you guys that we can answer. It's good to interact. It feels good to like have you guys kind of having questions and giving us stuff to talk about. And we'll get back into the crazy stuff that we sometimes talk about, like how you should wipe your butt and stuff.
Tim literally didn't answer any of my questions.
Didn't he say something about you being breastfed by a deer or something?
Yeah, that's the only reason I knew it was Tim.
I knew it was Tim when it was...
We went golfing and there was deer.
So did he try to get you to run up and milk the deer?
No, Tim's afraid of anything wildlife.
What?
There was a bear there. He was deathly afraid. Like, wouldn't get out of his golf cart.
Okay, a bear? I can hear that.
Yeah,
fucking
but it wasn't
bear,
like
I can
close.
understand.
It wasn't close.
Yeah, dude, no, there was just a grizzly bear with a human head in its mouth, and Tim was scared of it.
Like a squirrel, he'd jump. It was just a squirrel. Like he's.
Yeah, no, I get that. All right, we gotta head out. I will.
Thanks, everybody.
Dude, we're gonna play some League later, but thanks everyone for tuning in.
Thanks,
I
everybody.
appreciate all of you guys. Peace out, guys.
Talk to you soon. Thanks.